Markets were flying, but is something rotten in the Danish kingdom? Welcome to Daily Market Waves by Investing Angles, where every candle speaks and every Elliott Wave whispers before the crowd even blinks. Today's chart lineup is rich. Volatility just dropped a rare candle combo, epic. Dollars pushing back or pulling back. Is this a stretch or a signal? Bond yields still levitating. TLT, well, we did warn you. Gold is coiling, tension is thick. GDX Miners. If you listened last week, you're smiling today. Natural gas, no complaints, clean as it gets. Oil, signs piling up, pay attention. Uranium split, some names breaking out, others breaking down. S&P 500 and Nasdaq, aligned, but are they flying clean? Large caps, some candles are giving us the look. Feature, UnitedHealth, dropped right into the target. We saw it coming. And hey, a massive thank you to our 26,000 plus subscribers with over 1,000 new traders joining just this weekend. Welcome aboard. You just entered the only market channel where technicals lead and noise gets left behind. Now let's chart this market while most are still digesting headlines. And as usual, we start with the Volatility Index. And today we have an extended coverage. So this is the Volatility Index itself, S&P 500. This is Volatility Index Futures. This is US Volatility Index. And this is ProShares Trust VIX. It's VIXY. So what we are seeing here, a very interesting closure. First of all, the volatility S&P 500 itself. So it closed just a few basis points above yesterday's high. And this, we know, it's kind of a dangerous move. So there is a chance for a reversal because this run right now is inside candle or potentially a Harami. But the most concerning are the US Volatility Index, which ended with a Dragonfly doji, and the VIXY, which also ended with a Dragonfly doji, pushing it up. It will be up above the 200 days moving average, which made a cross with a 100 days moving average, a bullish cross just a few days ago. Well, I hope these Dragonfly dojis don't mean what they usually do. Tomorrow could be a significant spike. Just be prepared for this. And if we look at the bigger frame, this is the weekly. We still see that right now the candle is below the confirmation line, but there are still 2-3 days towards the end of the week and everything can happen. So basically, if the candle closes above this line, it means a big failure on the weekly side. And if we look at the hourly frame for volatility futures VX, what we are seeing after being grossly oversold yesterday, and the RSI, this is the RSI index. So this is it was below 7 at some point yesterday, and right now we are seeing a nice move higher and technically a good conversions here, and an hourly bottom is already formed. If we look at the 2-hour frame, it's still working on, and the 4-hour frame has a very good chance. Volume is quite high here, and the RSI is still oversold for a 4-hour frame. We might see it a little move higher, lower, but after that I would expect a very serious move higher. So this is something to watch overnight. For those who like to watch paint dry, but this is what candles are telling us, and I think that by midnight we might see some big surprises. So let's move on to the next one. This is the dollar index, and what we are seeing here, the dollar formed a very significant Harami, bearish Harami, but it requires a confirmation. So far everything is bullish here until we see it is confirmed. And if you look at the slightly bigger frame, this is 3-hour frame, or 3-day frame, pardon, which is closing in 1 hour and a half. And so far it looks bullish, and that will be the second closure about the eight periods EMA. And the weekly frame so far bullish, still 3 days to go. And the chart didn't change, the same as we discussed yesterday. There are still a few questions about this one because I'm not quite sure, as I discussed too. So which one to take for an impulse? This one potentially. This one could be wave 3 or starting it from here. So both are somewhat aligned. Let's see what the candles will say tomorrow. So far, dollar remains bullish. Now let's talk about bond market and TLT. And we start with candles as usual. So this is the 10-year yield. Candles daily is bullish, rather neutral. At this point, I'm not seeing any bearish signs here. Today, it was a very strong bullish closure yesterday, and the candle is still forming. We might see a change tomorrow. Most likely, I'm expecting a green day. And the weekly marginally formed a bottom here, and now we can see a 8 by 20 EMA bullish cross here with a green candle flying high. So the chances for higher rates by the end of this week are significant. This is the chart, Elliott Wave chart for 20-year yield, which is a inverse counterpart for TLT. So far, it is forming a wave as we discussed back in April. After forming a bottom here for wave 2, so far no concerns. This is a potential path unless we see some really strong sell-off. Now let's talk about TLT. Daily candle is technically bearish, could be neutral, but until we see a strong reversal, we count it as a bearish one. Large closures, 10-day frame, and I think we wanted to say 5-day. Yes, 5-day also closed today. A very clean confirmation of a reversal, this one, a big one, and the 10-day frame also bearish. So this is significant signals, and I am expecting TLT to continue down. According to our chart, something that we started discussing way back in April, and this was our last call on April 30th when we said that TLT most likely formed local top at 89.45, and right now it's down about $5 and it is moving lower. So potentially forming an impulsive wave. And today is May 13th. Good. So now let's move on to the next one in the bond market. And this is just a little warning to the Canadians. This is the weekly frame, and we have a very strong bullish engulfing here. And now 5 days or 5 weeks in a row, Canadian 5-year government bond yield is trying to form a consolidation flag here. I think that the next move will be something like this. Let's see what the Bank of Canada has to say at their next meeting. Well, that's the perspective of bond market. Now let's move on to the commodities section, and we start today with gold. So this is the one that we discussed yesterday. So far, this double top, potential double top, is not broken yet. Gold is testing the neckline, and if it is broken down, then that would be the targets about 3,000 and 29.72. So that's an approximate targets for now. So that's the daily closure of the candle. It was neutral today, and I have nothing else to say generally. So we are looking for a bigger move. We might see consolidation for a couple of days before the next move happens. The one that we discussed yesterday about this closure, 2-day closure, was yesterday, and the gold closed below this level, just a few basis points, technically confirming a top on the 2-day frames. And today, in 24 minutes, it is going to form a bearish engulfing on the 5-day frame, which is not a good sign, and technically it's an escalation of the momentum, of the bearish momentum. If we look at the Elliott Wave chart, so far I'm tracking two potential counts here. ABC in blue, it's a lucky path. If gold finds its bottom here and rallies upward here, well, then this correction is done. But if it escalates and accelerates down into this red rectangle, I would be considering as a wave 3 of a potentially bigger impulse. That's the perspective. Let's see how it develops. Gold is usually very, very slow. This is the technical perspective, something that we discussed yesterday, started discussing, and also the week before. After forming a daily MACD bearish cross of record magnitude, the same gold made the same on the 2-day frame, and now tomorrow it will be closing in 3-day frame. So far it is curling towards a cross. Let's see if it happens tomorrow. If it happens, well, then the things might accelerate. If it doesn't, well, then it's going to be happening on Thursday, Friday, in the next period. And if we look at the magnitude of this cross, it's by far the biggest one in history. So this was the second, I think, second highest in September 2011, which and another one was in 1980s. So for those who like statistics, the first cross led to 5 years of decline and loss of 67% of gold value, and in 2011 till 2015 it lost 45%. Well, so far this cross is of the highest magnitude. Let's see whether it extends to at least a weekly frame, then we will start talking about it. Well, I am just getting prepared for what might come, and hope you listen too. So this is the GOD. So GOD on the daily frame, the candle is kind of neutral, but it's not a reversal yet. Let's see what happens next. On the 2-day frame, it's also a neutral candle. We need to see a confirmation for either path, but I would like to say that this is not a very healthy one from the candle's perspective. If we look at the 3-day frame, there is a dark cloud and dark cloud cover and another candle which might confirm, might lead to confirmation. So we need to see it for another 3 days. As I said, gold is very slow moving asset, and at this point we don't have a clear direction here. So for GOD weekly, still 3 days to go. Anything could happen. So far the odds are somewhat neutral on the weekly frame. Now let's talk about silver. Silver, as I mentioned yesterday, it was rather neutral and is ready for a horizontal move. At this point, this bearish engulfing candle on the daily frame remains in charge, and silver is trying to negate it. If it closes above this line, 33.257, then we might consider it is reversing upward. However, as long as it stays below, the odds are neutral bearish. And the same is on the 2-day frame and the weekly. The weekly is more bearish, by the way, because of this weekly bearish engulfing and a failure to negate it. So far this week is somewhat neutral. Let's see how it closes. speaking about the silver, it's a very complex wave, and at this point there are so many paths possible. I think that most likely it's going to be the blue one. We might see another consolidating wave here, corrective wave, maybe a small impulse here, and the continuation down. Well, but there is no strong support for either wave at this point. Now let's talk about GDX. GDX Miners, what that is saying us. The daily candle is bearish, and we have a freshly made 8x20 MA bearish cross. So this is bearish, this is bearish. 3-day frame closure today, a very strong one. Most likely it is going to be a move down, and a freshly made MACD bearish cross just by 1 basis point. Well, still it counts, and this is not a healthy sign for the miners. On the weekly frame, there is a potential move down after this strong bearish engulfing 3 weeks ago. If you look at the chart, this is something that we discussed last week, the middle of last week, saying that we had an impulse down, correction up, and most likely we are looking for another impulse down. So far, this wave has been impulsive, but it's not complete yet. So this is 1, 2, potentially 3, 4, and 5. Let's see how it develops, what kind of size of this wave. So far, it looks like it is going to be in the red rectangle, but nevertheless, so far it is bearish. And based on the candles, we are looking for a continued move down. Now let's move to the next commodity, and this is natural gas. So natural gas today had a very good chance to form a bearish confirmation, but it was pulled up, and instead it formed somewhat neutral candle. Still, there is a chance that bears will try to reverse the thing again, but at this point, the odds are closer to neutral. So we need to see a confirmation for either path, for either up or down. If we look at the larger frame, they are remaining bullish until we see a reversal. So far, the candle is reversing, but 3 more days to go. And unfortunately, we don't have any closure in between, so we cannot evaluate the momentum very clearly. From the candle, from the Elliott Wave perspective, I am seeing this as a potential impulse up and the extended wave to ABC. Once it is complete, once it's found its bottom, then we would be looking for a very significant wave 3. And I think that this place here is underestimation. If we see a very strong move from here, wave 3 would be much longer, potentially up to here. But so far, let's wait until we know that the bottom is in. So, and I'd like to emphasize that the natural gas is bullish on the long term, and if you're interested, you can check our Investing Angles website, where we publish our work regularly, and particularly in the weekly analysis, when we discuss long-term perspective for all commodities, including gold, silver, natural gas, oil, uranium, and the other ones. Well, now let's move on to oil. And the quick checkpoint. If the previous breakdown has helped clarify the direction or risks, let me know by tapping the like button. It's a small signal, but it helps more than you think. Now, back to oil. What we are seeing here, today it was a very interesting closure. At the beginning of the day, I thought, well, oil is going to negate this potential bearish structure and fly high. However, it was pulled below the yesterday's high, and technically this is an inside candle right now, which is treated as a bearish one by candlestick theory. And at this point, the odds are somewhat neutral. We might see a spike higher. However, the chances for a reversal have increased. At the same time, if you look at the 5-day frame closure today, it's a bullish one, and it just reinforces the perspective for moving higher. However, it doesn't guarantee the next candle to be green. So I would say that's the perspective for the next day or two, just a little move higher and perhaps a reversal. And if we look at the charts, so the chart remains the same, the short-term one. If oil breaks above this blue line, which is 64695, let me put it here, 64695. So that we have this outline. So if it breaks above this line, then the red count will be invalidated, an impulsive one here, and we would be looking for the blue one. And if it moves above 64.995, it will invalidate even a bigger structure, which we will discuss in our daily update today, and also we will feature it in the weekly report, in the weekly digest. Well, now let's move on to the next one. And if you're finding, for those who want to more than just a video, our ultimate subscription includes full written access to market setups, wave charts, and high-level strategy across all major instruments. If you're serious about timing and signals, this is where to go. Email us at help@investingangles.com, let us know your country, and we'll find you a custom discounted offer. Well, now let's talk about uranium. So this is a good one if you're a bull for uranium, and the global uranium URA has a very good candles today. The daily closed just a few basis points above the yesterday high, and this is considered strongly bullish. And I'd like to say that it climbed above the 200 days moving average, signaling that this rally could just be starting. The 3-day candle closed with a strong continuation, bullish continuation candle, and after 8 days of 8-day formation of 3 white soldiers, we are seeing a continued move higher. So for URA, everything is green and bullish. And I'm going to talk about the chart, Elliott Wave chart, in our weekly update and our weekly digest. So tune in for this one. If we look, however, at the energy fuels, a quad U, it's not as green as the previous one, and that's a very interesting point. So now we are seeing technically a confirmation on the daily frame. This is a little bottom here, at least a local bottom, and I'm looking for a continued move down. A 3-day frame also closed with a strong dark cloud cover, and the 5-day formed a hammer, which is also a Harami. So I would say it has a good chance to pull back. However, the monthly stays green so far and bullish because of the bullish engulfing. Now let's have a look at the chart. So the chart that we discussed before, so far it stays. So we are looking for a bigger wave 2, potentially in this area. So it's between 4. Okay, let me put some targets here. Between 381 and 422. That's the ideal target for this wave. Let's see if it stops here. And once it's done, I would be looking for wave 3. And that's the general direction for uranium market right now. Now let's have a look at CCJ, Chemical Corporation. It's also bullish, and I would like to say that it's quite bullish. We have a bullish candle on the daily frame. 5-day frame formed a very strong 3 white soldiers. So be prepared for flight here. And the 15-day frame also formed a very strong today, formed a very strong tower bottom. And I'm expecting a move higher in the next 15 days or more. And on the monthly frame, after an inside up, the corporation had a chance to form a continuation candle on the monthly frame and continue much higher. So uranium market is green. Now let's talk about market waves daily and the S&P 500 roadmap. So we have a disconnect here, a big one. So this is the closure of major indices. So this one is Nasdaq, triple Q. And add it here. So it's somewhere missing. So that's triple Q. This is DIA and IWM. So what I'm saying that SPY and triple Q are bullish, but Dow Jones is bearish, and this is potentially a kicking candle. And I checked the Dow Jones itself, and it formed a dark cloud cover, which is not a very healthy sign at this point. And if I look at the 2-day frame, it's also a bearish candle here with the potential of a cross happen tomorrow to happen tomorrow. IWM is also not bullish at this moment. However, the candle is somewhat neutral, inconclusive. It requires a confirmation, but I'm very interested in see what will happen next. Usually IWM and Dow Jones are harbingers for the entire market. Let's see what happens. So I'm not convinced that the market will fly tomorrow, especially if we consider volatility, what we just discussed. And this is the futures. So S&P 500, Nasdaq closed with bullish continuation candles, but Dow Jones futures and Russell, they formed bearish candles, dark cloud cover and an inside one. Let's see what happens. Let's see what happens tomorrow. And another interesting closure today. We have 15 days candles inside up for S&P 500 and Nasdaq. However, Dow Jones failed, and failed big, because it was it was at the level of confirming, but it pulled back. And this is an even bigger concern. And this is the 5-day frame. This is the 10-day frame, also a failure, and the 15-day frame. We have it's an inside up, but it's unconfirmed. Well, that's a concern. And for Russell, technically it formed a bottom on the 5-day and the 10-day frames. So let's see how Dow Jones is going to recover from this situation and whether it pulls the entire market with itself. Now let's have a look at our technicals. They don't change until the end of the month. So we might see a reversal, but considering the strength of these signals, this is high. I am highly skeptical at this point. But there are 17 days to go and anything could happen. So this is the chart I discussed yesterday about 15-day candles, their fractals, and the closure. So today we have a closure. Let's see what happens tomorrow. And I'm really curious to see what kind of candle will be next, considering the strength of dollar, yields, and volatility. this is the Elliott Wave chart. So at this point, it surpassed my target that I outlined back in April. So far, everything is good, and we are not seeing a reversal signal. At this point, I think we might start considering an impulsive wave, but the question is, and let me put a different color here. So this is one potential signal. I put it in green. So this could be a wave and another miner. So this is a potential for an impulse. The only concern I have about this wave is that wave 1 is clearly corrective. It's not even a leading diagonal. It's just an ABC. And we know that the impulse cannot start with ABC. At this point, there is a chance that this could be a diagonal. So this wave, wave 3, potential wave 3, is not entirely bullish, or is not entirely impulsive, because it has too many overlaps, like this one, for example, or this one. We have two big overlaps that prevent us from counting as a clear impulse. So, but this wave could be a diagonal. So in this case, we would be looking for something like this. Whether it happens or not, that would be a very interesting story. And I think that the key point here would be a move toward this level. So this high for wave 1, it is 55.2875. 55.2875. So this would be a critical level to watch in the next this would be a critical level to watch for the next move if we see a pullback here. If S&P 500 crosses down at least 1 basis point, well, then the potential impulse will be invalidated, and we will be looking for either diagonal or a wave B or wave C in red. Yes, that's the perspective. That's the perspective. Now let's talk about the next one. So technically this is the same wave, just under microscope. So this wave is not clearly impulsive as I would like to see it. So most likely it's an extending ending diagonal, and if we see a very strong move tomorrow, breaking through several levels, this would be a critical point. Well, now let's move on to the next subject, and we'll talk about sectors. So technically, financials had a chance to form to negate this bearish candle, but they didn't. Instead, they pulled back, and now it's possibly a Harami candle. However, we need to see a confirmation. Technologies looks like it's bullish at this point. Industrials, if this green candle didn't have this huge upper shadow, I would consider this bullish. However, right now it's neutral. Staples and utilities are bearish, and the healthcare, thanks to UnitedHealth, is clearly bearish. Consumer discretionary and energy, they are bullish. Most likely they will see some move higher tomorrow. And now the most interesting, I'd like to stop here for a while and discuss the candles. First of all, Microsoft couldn't confirm a move higher tomorrow, and the candle is right now neutral. The same happened for Amazon, by the way, so it also had a chance to form a bullish continuation candle, but it didn't. Most likely it's a spinning top right now. Apple looks fine, and I would say that it had a very good chance to continue higher. Meta is technically bullish, and no concerns here. The candle is bullish. Most likely it will see higher highs. Nvidia, that's an interesting story. Let me open it to the entire screen. So Nvidia bulls should know that they are not allowed to move above Bollinger Bands. Every time they do, something unpleasant happens. So this one, so for example, this one, and this one. So this one was an exception. So I would say that 75% of time Nvidia suffers a pullback, sometimes significant one, after trading above Bollinger Bands. Let's see what happens tomorrow. This is just a little concern, a little warning here. So for Google, a very interesting move here. So far, this is the under bullish candle, big under bearish candle, big bearish engulfing. Now we have 4 candles which are trying to negate this one. So far, everything looks like a bearish flag, and I would like to say that Google formed an impulsive wave down, which after an extended correction will likely to repeat in the same direction. So far, this my estimate remains intact. And the final one I'd like to discuss here is the Buffett's company. As I discussed previously a couple of weeks ago, it is moving down and it is bearish right now. Today's candle just confirmed a bearish move here, and I'm looking for lower prices tomorrow. And if you're interested, you can watch our videos. Just search for Berkshire in our descriptions, and you will find a few videos, recent videos, that we discuss the larger path. Well, that's for large caps, and now let's have a look at Nasdaq. So technically, from Elliott Wave perspective, Nasdaq is no different from S&P 500. This is the chart that I outlined way back in April 22nd. Right now, it is Nasdaq is reaching the upper boundary 21.4K here, and it might reverse here. But so far, candles are bullish, everything is bullish, and we need to see a strong reversal signal in order to consider it. And speaking about potential impulsive wave, again, I have a reservation against this, the very first wave of the bottom, because it is clearly corrective. And if I'm looking for an impulse here, this would be the one potentially. So somewhere here would be wave 3 and wave 4 and 5. But considering the structure of this wave and the structure of that wave, I would be looking for a diagonal here. So Nasdaq could form a diagonal, and in this case it might want to pull back below the high of 1 and form another wave upward towards a new all-time high. So let's see what happens next. So that's the perspective so far. Now let's discuss the feature of the day, and it is UnitedHealth. If you're one of the returning viewers, I'd like to thank you. You already know the value of staying ahead. Let's make that official. Hit subscribe button. UnitedHealth. If you were one of those who listened to our call on February 23rd, when UnitedHealth was 456, And this was the chart that we outlined then. Well, you should be smiling right now, because today UnitedHealth hit 320 precisely in the target that we discussed, and right now it is 50% of the top. Now if we look at the candles, that's an interesting combination here. So first of all, I'd like to say that daily is strongly oversold, and we would be looking for a pullback, for not for a pullback, for a bounce, or even for a rally at this point. However, we need to see a reversal candle first, and the same for the 2-day frame. Also strong bearish candle. However, it is over, the stock is oversold right now, and at this point I'm anticipating some sort of reversal and the bounce to continue. If we look at this another chart that we shared also on February 23rd, this was technically the path for ABC. Well, it was very condensed. Oh, we were looking for wave B, and now this is potentially wave 3. And I was expecting it to be either impulse or the final part of the wave would be a diagonal, but it looks like market forces decided slightly differently. And at this point, the strength of this wave and its size makes me think about something even different, because now this would be, because the first wave was impulsive, this wave potentially is impulsive too, and we might be looking for an even bigger impulse. I'm kind of skeptical about this potential path, but this is what can happen. So if UnitedHealth decides to move lower, and I think that the critical path here would be, first of all, to search for look for potential reversal here. So we might see a reversal candle, and another important move would be to look for the character of the next wave. Either it is corrective or if it is impulsive. If this wave is a corrective one, then this danger could materialize, and we would be looking for a potential wave down here. However, if the wave is impulsive, I would say that this could be it for the entire correction, ABC, and we would be looking for a very nice and strong recovery and a move higher here. Well, that's the perspective, but we need to see what indeed happened next. So the next wave upward would be crucial. Well, that's all I wanted to say for UnitedHealth, and I hope you benefited from their initial call and also would be aligned for what might be coming next. And now let me wrap what you've just seen. If today's rally felt euphoric, maybe check the charts again. Volatility just through a candle setup we see maybe once a year, and don't say we didn't warn you. The dollar's pullback could be a breather or the wind up before the next punch. Yields are still sprinting, and TLT is doing the exact opposite of comforting. Gold is tiptoeing on a technical wire. Snap or surge, the tension is real. GDX miners are behaving exactly like candles forecasted. Natural gas remains a technical gem. May it stay smooth while it lasts. Oil, too many signs to ignore. Rally or reversal incoming. Uranium names are now officially divided. Some ready to run, others fizzling out. S&P 500 and Nasdaq flying high but showing some structural indigestion. Large caps, not all are equal, and some are quietly flashing warnings. UnitedHealth, textbook drop into target. Classic chart whisper. Hope you caught it. And remember, when price and hype diverge, we side with the signals. For full wave charts, setups, and micro views, head over to investingangles.com. Drop your tickers in the comments, or better yet, share this with your trading crew on X, Reddit, Discord, or wherever sharp minds gather. Like the video if it sharpened your edge. And as always, we don't follow the market, we forecast it before the crowd even blinks. See you in the next one.